So we are back at it again here with another video with the Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with ATER, and we're going to break down some data and all the information right now going on in the charts with 42 Vision as well, because it is showing some strength, and we're going to break it down from the 30-minute and the 1 day. But before we look at it and all the data together here and we break down all the information, I want to share with you guys the home run opportunities I mentioned this morning. Every single stock I mentioned this morning turned out to be a home run, and then we're going to get right into it here with ATER. The home runs of the day were spectacular, and every single stock I mentioned this morning turned out to be a home run, even though the S&P 500 index is struggling to get back up to all-time highs and is having a red day, and portfolios are sitting sideways or in the red. I will continue to look for opportunities daily, and this is something you can become part of as well by joining us. Check out the link down below in the description to the Discord. You'll become part of a growing community of investors all looking to learn and grow together. So this was our home run from yesterday that gave us 170% plus at its highest point. But today we were watching it and it turned out to be a home run again. INDP, OPAD, and IRNT. Let's go ahead and look here how these stocks perform. So OPAD, it dipped after the bell. We mentioned it in the pre-market, pulled back, and from that moment forward, it ripped, giving a highest point of 45% plus. Now, IRNT, we caught this one in the pre-market. It moved up a nice 5 to 10% move, and then it pulled back down and it ripped for a 25% plus move after that pullback. And here we are with the home run from yesterday. INDP, we caught this one in the pre-market as it was pulling back, and from $12 it took off to $15, giving a highest point of 30% plus, pulling back and having another run of 20% to 30% plus. This was phenomenal, guys. If this is something you want to become part of as well, check out the link down below, and we look forward to having you join us. This is how INDP performed yesterday. It was a home run yesterday, and it's a home run today all over again, and we'll continue to look for opportunities no matter what volatility is in the stock market. Let's jump into these charts. So here we are with ATER, and we're going to break down all the information right now, the short interest, the days to cover, the borrow fee rate, and also why this is one of the top possible stocks to squeeze, and what I like about it and what I don't like about it, right? So ATER right now is showing strength, and that's the first thing I love about it. And we were looking yesterday with 42 Vision here that this was shifting, right, from extremely downward pressure to some upward transition, and we wanted to see this turn into green bars, dark green bars, and shift into that upside potential, right? Like I talked about here, that it would go from red with green borders to dark green, and then we would want to see green, right? And that would actually push it up even higher, right? But we haven't seen that transition, but at least we're seeing some consolidation. Now, when I switch this to the 1 day though, it is showing a transition here of weakness. If this goes into red, that is definitely going to show us that this is breaking downwards, and we're going to have to watch specific support levels to see if this could hold up, and if the shorts are dominating or if the bears are going to lose traction because the bulls are going to push this up. So far the bulls are holding it up from this big collapse, right? This could have collapsed even worse. They're holding it up, and there's a battle right now, right? They're fighting for possession of the chart. So the first thing is, this is why it's the #1 stock to squeeze possibly, right? Because of the short squeeze score 97.82, and then the short interest float is 36%. And we have a borrow fee rate of 106, and I would just round that up to 107, or if you want to round it down to 106, that is pretty high. But like I stated in my previous video, the days to cover is what I don't like, okay? That means that shorts can cover really quickly and then reposition themselves with short shares. But I went over here, and you could see here that it was last updated 23 minutes ago as I do this video at the time of the recording. There is 0 short shares available. So if the bulls can push this up, right, ATER, the shorts will eventually have to cover, and this will change from 0 to 1,000, 2,000, or any number above 0, right? Because as long as it stays at 0, that means that the shorts are putting in all the pressure. Now, when you look here at the short shares volume, it has been going down, obviously, because there's no short shares available and the stock is just sitting sideways. If they put more pressure, right, and the bulls are actually trying to push this up, that's going to create a catalyst of a possible short squeeze. Now, let's go ahead and look here at a different set of data, how there's a little bit of numbers off, but it helps you paint a picture of what's going on, because this seems to be more updated and this is probably more outdated before the squeeze that we just recently saw in the chart happened. Okay, we're going to break it down. So here it shows 27% short float and short ratio was 0.46. That is the days to cover right there. And if we go back over here, it's now 0.06. It's gone down 0.4. Okay, when this number was higher, that meant that the shorts had less time to go ahead and switch around and they had more pressure. Even when you look at the short float, it was lower and now it's higher. So that goes to show you that with this days to cover, right, the spikes are going to be smaller. There's going to be a possible squeeze and there's possible upside potential from where it currently sits, or if it pulls back a little bit more and the bulls reappear, but it's going to be a lot less than it was before. And the short interest has actually risen since then, right? Since 27%, it is now 36%. So what I'm trying to say is, with this days to cover, yes, there's going to be moves to the upside and there could be short squeezes, but not as big as this one and not as big as this one. That is something to be aware of, unless the bulls come in strong and every single short is forced to cover of that 36%, and that can create a huge squeeze. But that days to cover gives them the leverage to cover and then go ahead and get right back into their position. And you could see it there from 36%, 27%. Covering has happened on this first run, right? It's unavoidable that happened, right? Some covering happened, and now short positions are way back higher than they were before. Before it was 27% before this run. Now it's 36%, and it all started within these numbers. So the shorts are not going to allow it to get back up to 17, 15 unless the bulls hold strong and come back in with strength, because if not, they themselves will hand this right back to the shorts and get shaken off because of either cutting losses or taking profits or giving up on the journey of a possible short squeeze, because this is speculative, and at these numbers it is much higher than the first time I mentioned it way back here on August 27th, when it took off from $5 to 10, came back down to 5, and took off to 19. I mean, that was a phenomenal run, but at these levels, there's still a possibility, and it's one of the top stocks set to possibly squeeze. High borrow fee rate, high short squeeze score. The only thing I don't like this time around is the days to cover. I mean, that is such a small window, giving so much power to the shorts, and that right there can actually create no way for a squeeze to really happen to the upside with big potential, because the bulls themselves can get shaken or won't hold through the jumps, because that's the big part as well. And not as many shorts are going to cover and stay covered. They can cover and then go right back to being shorts, if that makes any sense. So there's some key levels here on this chart that I'm looking at, and the first one is this support level of 934. If that gets broken through, I would watch it very carefully and see if the bulls try to reappear or if the bears are tearing this one down fairly fast. And the two resistance levels that are important right now is yesterday's high of 1172 and up here at 1261. They need to be broken through by the bulls to push this up and force eventually the shorts to cover and possibly forming a squeeze or a jump on the share price. As always, thank you guys so much for watching, and let's make some money.